Good evening. Good evening. Okay. Hopefully you can hear me now. I just had internet unstable, but good evening. Drop it in the chat. Let me know where you're calling from. And I want to thank Mr. Phillips. I just want to thank him so much, Mr. Love Phillips, for what he does, what he brings to the table. I want to thank him for being such an important part to the BYOB movement here in Jacksonville, Florida. So continue to drop it in the chat. Let me know where you're calling in from. And as we get started, I want you to know that your mindset is so very important. Mindset. So tonight is a training call. So we're going to start that training off the right way. And what is that? How is that? You need to speak over your trade. You need to speak. There it is. There it is. I am a master trader and all my trades end in profit. I am a master trader and all my trades end in profit. And why is that important tonight on a training call, right? Why is that so important tonight on a training call? It's important because how you train is how you execute, right? How you train is how you execute. If you watch sports, we train harder than we actually play, right? You actually train harder than you actually play. You want to make sure that you put your mind in the game, and you want to make sure you do it right. So yes, tonight is a training call. Tonight is all about training, and understand that we're not taking live trades tonight. However, it's about putting you in the right position, putting you in the right spot. So Trinidad and Tobago, I am a master trader. All my trades end in profit, right? I love that. So just keep dropping it in the chat as we get started this evening. Keep dropping it in the chat that I am a master trader. All my trades end in profit, because I want to make sure you affirm that. You need to affirm it and you need to believe it, right? You have to do that. So I'm going to get everything pulled up here. We're going to get started. Now, what we're going to do tonight is I'm going to give you some basics. So last week, we actually talked about investing versus trading. So now we know that we are actually trading. We understand what we're doing and why we're doing it. But I want to make sure that you all understand how exactly what I need to do to put myself in that position to win. How do I actually properly execute, right? You want to properly execute. And in properly executing, we definitely want to make sure that we start with the basics. So we're going to get some basics, and then we're going to go over the strategy. We're going to go over the BYOB cash out and helping you understand the swing of the market, the trend of the market to put you in profit. So let me share this with you, because we're going to start with some basics first tonight. Gonna start with some basics. So this is, once again, BYOB cash out. Now, first things first. And that should not be a .com. That should definitely, hold on, because, and see, we all do that. So that should definitely not be a .com. So, and that's just out of habit. So you definitely want to make sure that you visit iam.center. I want to make sure you have that right. So iam.center. So you want to go into the academy. You want to start with the academy. Now, understand, if you have not been through the academy, and I mean the new academy, so I don't care, tonight is your day one. Tonight is night one. So whether you've been enrolled a week, whether you've been enrolled a year, no matter how long you've actually been enrolled, you want to make sure that you begin with that academy. And I want you to go back through that academy, because there are a lot of updates, right? So just imagine when I enrolled, it was a wonderful, right? It taught us what we needed to know. But now it's actually, it got better. It got better, and it's going to continue to do so. So you just want to make sure that you begin right here. There is a getting started video that I have posted on YouTube, and that's going to walk you through everything that you need to know on that Getting Started playlist. So anytime you enroll, you want to make sure you get started the right way. This is a wonderful academy. It's going to teach you what you need. It's going to show you from counting pips to everything that you need to be successful. So you want to make sure you always grab that foundation. And then we go through IML TV, IM TV, and you want to make sure you're doing those recordings, that Forex 101 and Forex Basics. So you definitely want to make sure that you're covering there. Now, risk management. Okay, I'm going to emphasize this. I'm going to emphasize on the risk management, right? I'm definitely going to emphasize this. And I'm going to emphasize it because with risk management, we all got started to put ourselves in profit, right? We all got started to make money. That's why we are all here. But I want you to not think about the money for a moment. I want you to understand it's about the skill set. That money is going to come. It is going to come if you focus on the skill set. The skill set is the most important thing that you're going to learn here, because that skill set is actually what's going to put you in profit and what's going to keep you in profit. It is that skill set. So understand that. You want to make sure that I cannot stress that enough, because you should not have a goal of, oh, I'm going to make $5,000 this much, or I'm going to be rich, or I'm going to this. The skill set, because proper risk management, when you think about risk management, you think about the fact that you're leveraging your account right, the fact that you're actually putting the right PIP, the lot size on your PIPs based on your account balance and what you're willing to risk per trade. It's about the fact that you're keeping your emotions in check, right? You have to keep your emotions in check. And keeping your emotions, hold on. Okay, as you log on, make sure, let's keep the integrity of the call, and let's make sure we stay muted. So you want to keep your emotions in check. And keeping your emotions in check, that means that you are always going to, so you're not concerned about what happens. We talk about the market on some of our calls. We talk about the news. We have to understand that we're learning a technical skill set. Technical, but then there are some fundamentals. So we ride the wave of the market. We ride the wave. We are not the market movers. We are not the people who make the market move. So what we have to do is be non-emotional, because if you can't have two emotional people, they have emotions attached to what they do. So now you have to ride the wave. And I do that by being non-emotional. When I sit down, I'm not concerned what's happening in politics. I'm not concerned with what's happening around the world. My concern is, how is what's happening affect my money? How do I trade this? How do I look at this chart and I trade this? It's not, okay, I'm going to route my trade along, because I know that I need to put it in properly, and I need to practice proper risk management. I need to understand the strategy. I need to make sure I demo first. All of those things are important. So that's what you want to do. And then you're going to learn that skill set and stay focused on that. So this is what we're talking about, is the BYOB cash out. So that's why I just told you at the end of this call, we're going to cover the fundamentals of the cash out strategy. But you first want to understand the foundation. And so we have to understand the foundation. And demo. I cannot stress that enough. You don't just jump in the market expecting to have that skill set. You don't jump in the market expecting to be able to just go through the academy and jump out there and start trading. No, what you want to do is make sure that you demo first. Your demo account should look like a live account. You should treat your demo account the same as you do a live account. That's what needs to happen. I cannot stress that enough. Some of the most successful traders that I've seen have always started with that demo account. They start with the demo account, making sure that they treat it like a live account. They leverage it properly, and they treat it as if they are the ones that actually put that money in there. When I get those results, that's the testimony I'm looking for. That testimony. because those are the ones that are consistently in the blue, meaning you're winning. Now, I want you to understand we have different market orders. We focus a lot on market execution, but I want you to understand you don't always have to sit at the computer. You do not. So you don't have to sit there. You don't have to always say, you know what, I got a market execution. There are 5 different ways to enter the market, 5. One of them, of course, is market execution, meaning that when I place that order, I'm automatically in the trade, right? I'm automatically in the trade. That's what that means. So that's what that means. So, and just to kind of reiterate, just to go back a moment, let me, on that demo account, and you're gonna hear me talking about demo account a lot tonight, because I want you to have 30 to 45 trades executed in your demo account in profit, right? So that's not, when I say 30 to 45, I'm not talking about I took 60 and 30 are in profit and 30 are not. I'm talking about 30 to 45 consistent trades in profit. Yes, it's 92% accuracy, so you might have a few that are not in profit, but I want you to be consistent enough that you're comfortable to jump in the market. You're comfortable enough to actually get in the market. So I just want to make sure that I emphasize that, and I stress that to you, because you want to practice. Perfect practice is how you get perfect. You'll never be perfect, but perfect practice. So it's not just about entering trades and practicing. It's about trying to perfect the strategy, trying to perfect your executions, trying to understand. And a lot of questions that we get on the calls, a lot of questions tell me that, one, you have not been through IM.Center, and we want to make sure we start there first, the foundation of how we get started, and then we move into proper demo account. And you want to demo with a broker. You want to demo with a broker you're going to use, and not what's on your MetaTrader 4. Because if you're demoing with what's on your MetaTrader 4, you're not taking into account the broker spreads that you're going to utilize. So there will be a difference. If you demo with your broker you're going to use, then guess what? You'll actually profit with that broker, because it'll be a very, very smooth transition from a demo to a live account. Now, you buy stop. You buy stop. 5 different ways to enter the market. That first way, the first way you enter the market is actually market execution. That's not on here because it's nothing, is the order's placed, you're in the market, right? You place the order, you're in the market. It's that simple. It's nothing added to that. You're in the market as soon as you place an order. You're not putting in a price. You're not doing any of that. Because I'm in the market, as soon as I touch market execution, I'm going to buy the market or I'm going to sell the market. Just that simple. Now, what a buy stop is, the buy stop, that means my order is placed above price. So, and it keeps going. So what that means is, and you'll see that sometimes with the US 30 trades that we put out, you know, you'll see a buy stop or a sell stop. What does that mean? That means that there's a price that I have an expectation that the market is going to keep going. The price is going to keep going into a buy. I don't want to, I feel that it is. My analysis tells me that it is. However, I want to make sure that the market moves in that direction before I enter the trade. Same thing with a sell stop. I have an expectation the price is going to keep going down. Now, as that price goes down, I want it to get to a certain price before it goes down any further. Typically, those are at support and resistance lines. So those support and resistance lines, I wanted to push past a resistance line, or I wanted to push through a support line. And when that happens, I can comfortably enter that trade. Now, what a buy limit is and a sell limit is, I believe the price is going to go, for a buy limit, the price is going to go up. However, the order is placed below price. So right now I'm in a sell. It's actually moving in a sell, but I have every belief that it's going to turn around and go back up. A sell limit, it's actually moving in a buy right now, but I believe that when it gets to this point, it's going to turn around and it's going to come back down. So let me show you some examples of that. Now, Now, so yeah, now what I'm seeing right here, so this, once again, you see these are those support and resistance lines, right? Support and resistance lines. So now what I'm looking at is my buy stop. So you see the market is moving within that range. It's moving within that range. So in that range, I have an expectancy that it's gonna break out of that range. And when it breaks out of that range, it's gonna be continuing a buy pattern. When it breaks out of that range, it's gonna continue in a buy pattern. So I'm expecting it to break out into a buy. I don't wanna enter the market while I'm in this range, because as you can see, it might have broke out, but then it didn't. It came back down. It broke out, but it didn't. It came back down. So you're expecting it, but when is it going to break out? See, you would have to ride all of this pullback, right? You would have to ride all of this pullback if it did not break out at that point. So we don't want to do that. What we want to do is enter the market when it's appropriate. We want to enter the market at the right time. Now, what is a sell stop? Same exact thing in the opposite direction, right? Same thing in the opposite direction. So okay, so somebody saying they can't. Can you hear me? So
I hear.
Okay, awesome. So same exact thing. And I just had a private chat. Somebody asked me about that, telling me they couldn't hear. So telling me my audio wasn't on. So, okay. So what you're seeing is you want to make sure that it's in that range. Same thing in opposite direction. So you wanted to break through that. So you wanted to break through the support before you enter the trade, right? That's breaking through the support before you enter that trade. So that's what a buy stop and the sell stop is, right? So you see it's typically in that range area, right? So even this looks like a down, right? This is a trend, right? You see we got a downward trend right here. But even still, when it breaks up, right, it goes up. You notice that the trend, they actually do correlate with support and resistance lines. So when you have your higher highs, your lower lows, and your lower highs, and your lower, right? So that's where that is. So that's what we're looking for. It will actually go back up. So this correlates with those support and resistance lines as well. And so it goes back down and it breaks out, it continues, and now you actually want to enter the market. Buy and sell limit. Buy and sell limit. Now, you're in that range, right? The range we were just talking about. So in this range, the same thing, the market is moving up and it's moving down. It's moving up and it's moving down, but it's going to stay within this range. So what a sell limit is, there's an expectancy, right? Remember I said you're in a buy. Okay, I'm in a buy, but there's an expectancy that is going to turn around and come back down into a sell. That's because we do not expect it to break through this resistance point. We do not. We do expect it to touch it. We do expect it to touch it, but we do not expect it to break back down. And I want you to think about something. What did I tell you the PSAR is? The PSAR is it's like a moving support and resistance line that kind of moves with the candles, right? It moves with the market. Well, guess what? You see, we always put our stop loss outside of the PSAR. Same thing, because it always touches that resistance. It always touches that support line. That's what it does. So knowing that we believe that it's going, based on our analysis, is going to turn into a sell, right? It's going to turn into a sell. I can actually put a sell limit order in. And you see I'm referencing the cash out because you can actually, once you move past the initial stages of training, you can actually start beginning to put those orders in when you see it lining up, because those PSARs are just like your support and resistance lines, right? They move right along with that. So you'll notice that the PSAR flips around that same time of support and resistance. So this is going to help you in the future. After you start maximizing that strategy, you see you got your sell limit. It pushes up into a buy. It touches the resistance. So that means it moves past it. It pokes that resistance, or it's going to move past it and come back for a sell. So once you hit the point, for example, right here, a little below it in this case, or it can be on it, but a little below it in this case, in this example, that's when you would enter the market for a sale. And the same thing vice versa. With your buy limit, I'm moving in that sale. You see this one actually protrudes past the support line. So it passes that point, it turns around and it begins to buy. And then you're actually in the market for a buy at that point. Now your stop loss, I cannot stress how important this is. You want to stop your loss. So that's what it stands for, and that's what it means. It means stop the loss. So we know that if I'm telling you 92% accuracy, there is an 8% that you're not, there's 8% of the trades that you do not win. So if 92%, so out of 100 trades, you won 92, you didn't win 8, right? That is a great percentage. But what you see is that you always want to minimize that. You always want to minimize that. So your stop loss is going to be, below your PSAR, right? Because we're relating everything to the BYOB cash out right now. So your stop loss is below the PSAR for a buy. It's above the PSAR for a sell. You never want to trade without it. So for example, if I was looking for a sell, let's just say you have been in a sell or you were trying to take a sell here, but for whatever reason, this trade turned around, right? Let's just use this as an example. Look at the pullback. Look at how long this trade went into a buy before it turned around. So if you didn't have a stop loss, now you're way 100, 200 pips in the red before it turned around. This is the importance of a stop loss. So you just definitely want to make sure, because that's the risk taken. So when you're trading from the risk that I'm willing to lose and not the gain that I'm looking for. That is how you always stay ahead and always manage your finances. Just like with your finances, you should have a budget, or you should understand, this is how much spending money I have. This is how much play money I have. This is how much money I have to the side. This money I'm not willing to risk. This money is designated for something, but this money is what I'm willing to risk with something that you want to do. It is no different. How you do one thing is how you do everything. So if you're not, so a stop loss is important. If you're not using a stop loss, then you're probably not managing your other monies correctly. You want to make sure that you're managing it. Remember, how you do one thing is how you do everything. So that stop loss, put that in place, right? Put that in place. So that 8% no profit includes break evens and losses. So what the 8% is the 8, when we back tested this strategy, right? When we back tested this strategy, we back tested it on every currency pair. We did it on every currency pair, and we back tested it for over a year and over a year. So with that being the case, 92% of the trades came back in profit based on the strategy. 8% did not win. They ended in stop loss. Now your stop loss, your risk management, what you put in is what you're going to, that's your stop loss. So your stop loss minimizes that 8% loss. Because as I just showed you, if I'm looking for a sale, now of course this one of course is for a buy, and that's where they put the stop loss. But if I'm looking for a sale, like let's just say I entered this trade into a sale right here. and my take profit was down here somewhere. You notice how it got close, but it didn't quite touch it. So, but then it turned around and it went back up. So let's just say that was your trade. And you have the analogy that I'm gonna ride this out and I'm gonna wait for the trade to turn around. Look how far up it went and it did not turn around. So no one should ever be blowing an account, right? We should never be blowing an account. Hold on. We should never be blowing an account. So that's what proper risk management does for you, is help you manage your finances. Now, your take profit. Your take profit is going to be, right, you have your stop loss, you have your entry point, and your take profit. Understand, you are, however we enter the market based on what we just talked about, but let's just say this is the cash out and you did a market execution. So your stop loss will take you out of the trade. It will stop the loss, right? It will stop it at that point. Your take profit will take you out of the trade, but it will take you out in profit, okay? That's why it's called a take profit. So you want to make sure you put that in there, and you can actually you trust your analysis, you can actually sit your phone down and walk away from it. You don't always want to have to be watching your phone. You want to make sure you manage your, manage your emotions. We don't want to trade emotionally, because I know a lot of people actually monitor and watch their phone. Now, a PIP, the academy is great, right? So you want to make sure you go back through the academy. But just to give you an understanding, that PIP is your percentage in point, right? That's what a PIP is. So a PIP is that movement in the market. So yes, it's that movement in the market, right? So let me see. Yep, playing with my pips is like playing with my emotions. Exactly. It is the movement. So you see the numbers on the side of the chart. You start with your major Forex currency pairs. You see your numbers. You see all of that on the side of the chart and on that right side, and that's that pip movement. Now, most currency pairs is the fourth decimal, unless we're talking about JPY. So once again, if you open your phone and you open your phone to the advanced settings, when you open your MetaTrader 4 and you're looking at the advanced settings, you will see that they have 2 digits that are greater. So we're talking about just that 4th digit, but why would 2 be great? Why would 2 be bold and bigger than the other numbers? Well, most people go for 10 pips or more, right? So a lot of people trade for 10 pips or more. So if I have to add 10 pips, you have to use 2 digits. So that's why that's bold. That's why that's bold, bigger, right? That's why it stands out, because you'll notice that when you look at your phone, the 4th digit behind the currency pair, if you look at your major currency pair, even your minors, you notice that it's the 3rd and 4th decimal that is larger. And then on JPY, it'll be the 1st and 2nd one. If you're looking at cryptocurrency, you're looking at something else, you're looking at indices, it's going to show you what is larger when you're talking about a point movement. Or so you always know how to count your pips and what you should be looking for by just glancing at your phone as well and looking at MetaTrader 4. But here's an example, a 1 pip movement. See, you have 1112. So for a 1 pip movement, that 4th digit behind the currency pair, 1113. Now notice, you will have a 5th number back here. That's called a pipette. Most people tell you just ignore it. I've told you just ignore it, right? JPY, you see, 2 digits behind, 93 to 94. But you still will have a pipette. That pipette is the brokers. That's competition. That's for the brokers. So even on indices, you'll notice that you'll have a point something when it's really just a movement. That's for the brokers, right? That's for the brokers to actually, for their competition, for them to offer lower spreads. So that's because the spreads is where the brokers make money. So yes, we ignore it, but that's why it's there. Now, how does my PIP, how much money is my PIP? How much is my PIP? How much money will I make with a pip movement? So here you go. Most brokers start here with a micro lot. So when you enter, you are entering 0.01. You're moving at 10 cents a pip, okay? Then you have your mini lot. So you're looking at 0.10. That's what you enter. And that's movement at $1 a pip. And so your standard lot is a 1.0 and you're moving $10 a pip. Indices move different. They are actually looking at points and not pips. So understand, some brokers, they'll say 1.0, and that's really like $1 movement. So understand that indices is not, when you enter it, this is why that demo is so important, so you can get a feel for it. And so I'm just trying to address some questions that I get all the time, because you look at the indices, no, you're not trading $10 a pip. You're actually talking about a 1-point movement. So you definitely want to make sure you understand this, because it's not how much money is that currency value worth. We're not trading, we're not buying and physically holding onto it. So what you're looking for is pip movement in the market, right? That's what you're looking for, is pip movement in the market. With that pip movement in the market, it's worth what you give it value. It's worth the value you give it. You just need to know which currency is stronger, so I know if I want to buy the market or do I want to sell the market, right? Do I buy the market or do I sell the market? And when I make that decision and make the decision of how much I want to move for pip value, that's when I now add my lot size to it. That's how I make my pip movement work. So you can trade, I can trade. I can move 10 pips and make 10 cents a pip. You can make the same movement and make $10 a pip. So I move 1 pip, I made 10 cents. You move 1 pip, you've made $10. So it's when someone says how much money are you making, how much money can you make with the movement, is how much money did you make your pips worth. That's how much money you can make. So it's really up to you. So that statement is up to you. It really is up to you. And I highly recommend that compounding sheet. Points is just, the points is just one, when you move, it's just 1 point instead of pips. And when we get to the chart, I'll pull it up, show you the points. So opening a demo account, because we're going to the chart after this. Open a demo account. So now I'm not promoting a broker. This is just one broker. So I have to give you an example off of a broker. So it's not promoting a broker. So understand that. But so this is CoinEx. I want to go open an account. So remember, we're not using a broker from MetaTrader 4, right? We are actually going to a broker site. And off of that broker site, we're creating a demo account. So when you actually open this account, right, you open this account. If you got a question, go ahead and drop it in the chat. Go ahead and drop it in the chat. Because I want to make sure that you're all with me as we go through this. Because if it needs to take more than 1 week, then it will. So here are your settings. So when you get to your MetaTrader 4, so you go through, you open that broker account, right? You open that broker account. And when you do, you create a broker account, you create it on MetaTrader 4. And each broker will have, their system is a little different, but it's really the same thing. And it's the same information, should I say. When you get in there, they're gonna ask you how much. Now, with your broker, you have to actually put how much money you wanna begin trading with. So you're trading, right? When you're trading, you wanna make sure that you definitely put that in there, how much money you're gonna be trading with, but you wanna do it with the sense of, I wanna trade with the amount of money that's realistic. If you don't have $100,000 to put in there, don't say I'm trading with $100,000. Do your demo account $500, right? $300, $1,000, what are you actually going to open your account with? Now, when you get to MetaTrader 4, okay, when you get to MetaTrader 4, you definitely want to look at your settings, okay? This, now, of course, you know, this is an iPhone, so this is an iPhone, so hopefully it's the same for Android, but cough, cough, hint, hint, you should have an iPhone. No, I'm just playing. But so this is where your settings are. And then you want to actually, when you get to your settings, you see you're going to open an account, and not open an account, you're going to enter account information for an existing account. So you're going to have your live, or you're going to have your demo, right? And so that's actually where you want to enter that. And so that password, when you go there and they're going to tell you that password that you are given, you're going to be given a crazy login and a crazy password. And you'll actually go on there and do it. Now, if you go, like, let's say you're using Crypto Rocket, you don't have to go to their site. You can actually just go to the settings, find Crypto Rocket, right? So once again, it depends on a broker. And now you actually create your demo with them on MetaTrader 4. So you can actually create it there. But that's how you do it. And then you actually see your accounts listed, right? You'll actually see your accounts listed there. And then now you want to begin entering your trades, right? How do I do that? How do I do that? So you open your MetaTrader 4 account on your phone, and you see you have your list of currency pairs on the side, right? You say it and it's on the side. So it's on the side. So now, well, there we go. So you enter that, you enter the currency pair, and you actually want to do a new order. Now, I always open my chart. And then, but from a new order. So here we are on Android, you got a new order, right? And then you actually do market execution. So here we are at market execution. And when you hit that market execution, now I'm going to tell you what I do, and you do it the way you do, because remember I told you have what's called a pip reaction time. You want market execution, you want to get in the market. You want to get in the market because you saw a trade and now you want to be in the market. So market execution, and then I go back and I modify. I always go back and I modify. So when you're on that trade, you can actually go back and modify. And when I modify, I'm already in the market, but on the Android, right? You see that it just has the underline, it's green, and it'll tell you this is where you take profit. And then you have red, and this will tell you this is where your stop loss is. Now, this is where I go in. Now I have my trade there. I go in and I modify my order, and that's when I put my take profit and my stop loss in. So I actually hit market execution, then I go back in, I modify my order, and then I put in my take profit and my stop loss. Your take profit is 10 pips from your market execution, 10 pips. So when you're looking at, it's not on here, but it's covered up. When you're looking at this trade, you actually see a number here, and that's where you actually enter the market, okay? That's where you enter the market. So that's where you definitely want to make sure you do your 10 pip from where you entered the market. Now, an iPhone, woohoo, iPhone, much easier. So you open your MetaTrader 4 and you actually have your quotes, right? You have your quotes to the side. So that's your list of your currency pairs. Now, here is where you see simple and advanced, what I was talking about earlier. You got simple and you got advanced. Was that on here? No, see, on the Android, you actually have to go into settings. So you do have to go into your settings and change that to get what I'm looking for and what I'm referring to. On the iPhone, you see it says simple and advanced. If you switch to advanced right here, that is where these numbers will get larger and you will actually begin to see your spreads underneath here. So change it from simple and move it to advanced, and you will actually be able to see the numbers. That you'll see the spread, and you'll see these numbers will be enlarged to where you'll know which one is your pip, where you want to count your pips from. Now it's the same exact thing, right? We want to go click trade. We want to trade from here. Now on the iPhone, it actually tells you take profit and stop loss. However, as I stated before, I do my market execution. I buy the market or I sell the market at that point. Then I go back and I modify and I enter my take profit and my stop loss. This actually says take profit and it actually says stop loss, okay? Now for your live account, you go do the exact same thing, except for now, for your live account, what's gonna happen, you go into here, you see this is where demo account is. Now this is where live account. Once again, the brokers, you wanna make sure with the brokers, they are a little different, but they're all doing the exact same thing. It's just because everybody's gonna have their platform set up a little differently. You wanna open it, create that account with that MetaTrader 4. Now, this is where you wanna select your leverage and your currency, and you wanna open a live account. Now, how do I fund it? See, before I had money there, I will put so on a demo, you have another line. The demo, you have another line, and that's where you actually enter your currency that you want to begin trading with. But for a live account, I actually have to put the money in there. So how do I do that? One of the ways you do it is Coinbase. Another one is Cash App, right? So with Cash App, you actually have to go, before you put any money in Cash App, make sure you actually go enable deposits and withdrawals and let them verify your account first. Even with Coinbase, you're going to have to set up with your card and all of that before you can do any of that, okay? Before you can do any of that. However, I'm looking for the same things. First, I have to buy it. Whether I'm here on Cash App or I'm on another platform, you actually have to buy. Once your account is verified, then you come in and you buy the currency. You need to buy the currency. And you want to put it in a Bitcoin wallet. So you buy that currency. So as you can see, we're buying Bitcoin, whatever it is that you're wanting to use. So I'm buying Bitcoin, and on, like, for example, on Coinbase, they're going to give you your limit that you're authorized for that week. So Cash App, you have to still buy it first. You buy the Bitcoin. And then once you buy it, now I want to go to my, I want to go back to my broker, select the trading ID that you want to fund, right? The amount of currency, but you want to put it in Bitcoin. You always want to transfer it in Bitcoin, okay? You're transferring in Bitcoin. They're going to give you an address. You get your Bitcoin address, okay? So here's my Bitcoin address. I need to copy this because this is where the money's going. So it's like you're sending money from one place to another, but you have to know where to send it to. So I just bought it in Coinbase, I just bought it in Cash App, or I just bought it on a different platform, but I still need to know where to send it to. So I go back to my broker and I get my address. Then I bring that address back to my exchange that I'm using, and I want to send. See, here I want to actually send. In Cash App, I want to withdraw, okay? So they both mean the same thing. I want to send it out of here. I want to withdraw it out of Cash App. And you have to put the address that you want to put it in. So that's where you put that address that you actually want to put it in. And when you send it, depending on your broker, it's going to go to a wallet with that broker, or it's going to go to a wallet, or it's going to end up in directly into that account, like with CoinEx you just saw ended up you put it directly into that account that you want. So understand, here it is. Here it is. I do have a copy of it. This is what that means. So this is the advanced. You see, this is on advanced. This is on advanced. So you have your Euro USD, and on advanced, it gives you the spread. It gives you the spread, right? This is an exotic. The spreads are always higher. So you actually have the spreads. Now, this is what I meant. This is my pips. So you know the fourth digit behind the decimal is my pip. However, 2 of them are larger because we typically move more than 10 pips. So you're gonna, is giving you the keys to the answers. You have the answer. So you see it's larger, right? You see it's larger. And then of course, this is the pipette. They actually make the pipette little for you because the broker is really the only one concerned about the pipette. So you see even on the exotics, it's telling you which one you're looking for, So as you can see, when you're compounding, right, you begin compounding, you're practicing as it's supposed to be. As you can see, you start profiting, right? You should be excited about this profit. You should be excited. I mean, this is 5 pips. You should be excited, right? Because you're in the blue. You're focused on the skill set and compounding, right? Focus on the skill set and compounding, and then your trades begin to look like this. That's when your trades start to increase, and that's when they start to look like this. And that's when you're catching pips. So before I actually go to the other thing, do you have any questions? Any questions? I know I answered a few as we were going through the information, but do you have any questions on anything before I change over? No questions? I want to share something else with you. What do you mean those traders? What's your question? I don't know what you mean by those traders. If you can clarify that question. Brokers, where do you get those brokers? You actually go to the broker site. So whatever broker you're going to go to, each broker has its own website. So whatever broker you're going to utilize, you have to actually visit their website. Each broker will definitely have its own way to fund it. Now, Bitcoin is the common way across the brokers, but each broker is different. So, and most of them are easy, right? I'm not going to promote Hugo's Way or take away from Hugo's Way. I know a lot of people use it, but each broker's funding is easy. It's not difficult to fund a broker, especially if you're utilizing the cryptocurrency with the Bitcoin wallet. So it's definitely not. There are many brokers. I mean, you just saw, now I'm not going to recommend one, but you just saw CoinEx. I mean, you have Hugo's Way, Traders Way. You have Crypto Rocket. I mean, it's so many brokers out there, and you can actually just do a Google search of foreign exchange brokers and kind of do a comparison of the spreads, because the lower the spread, the better. But you also want to be with a broker that of course you're going to trust, but you can just do a Google search of some brokers. Definitely do that. So, and John, you say you got one question, but what is the question? So there's something else I definitely want you all to understand. Let me pull this up. Because I don't believe we're going to have enough time to go through everything I wanted to, which is fine. Oh, you're welcome. Through demoing. I pick my brokers through demoing, playing around with them, seeing which one I like better. Honestly, that's how I did it. So we'll get very deep and in depth next week, but I definitely want to share this with you. So for your currency strength, right? Your currency strength. Now, understand you are buying and selling at the same time. You hear that, but what does it mean? What does it mean? Well, you have your base currency and your counter currency. You got your base currency and your counter currency. Your base currency is the first currency. Your counter currency is the second currency. Now, one currency is always going to be stronger than the other one. You don't really need to be concerned with how much each currency is worth, because we're not physically buying a currency. So you're not purchasing it, holding on to it, taking it home. We just went over how you make money, right? How do you make that profit? We just went over that. So what you're concerned with is which one is stronger, because whichever one is stronger, remember, whichever one is stronger is how I make my money, because I'm going to buy the market, I'm going to sell the market. See, what you're not doing, we are trading the foreign exchange. Now, but what's behind the scenes is all the markets moving around the world where people are taking orders. They're buying and they're selling and they're buying. So just like if you were to watch TV and you see the New York Stock Exchange and you see people all over the place running around, they're buying, they're selling, they're buying, right? That's what's really happening. But you're not the one having to do that. You're watching the market, where this is telling you, giving you the entry triggers to understand what's actually happening on that floor. So this is the heavy lifting is done for you. So what you have to focus on is what's stronger. Do I buy based on all that activity? What's stronger? Do I buy or do I sell? Now, if my base currency is stronger, like in this case, USD JPY, if my base currency is stronger, then I buy. If my counter currency, which is JPY, is stronger, then I sell. Now, last week we did the investing versus trading. So you understand that most of the time you buy something and you hold it, and that transaction is not complete because you've never actually sold it. So you're actually fluctuating with the market. You're actually fluctuating as the market goes up, the market goes down, because this, just like if you're in a trade and you watch the trade go up and then you watch it pull back, that's what your investments are doing, because you haven't closed the trade. You haven't closed the transaction. So if my base currency is stronger and I move toward a take profit, what I do first is I literally buy the market, then I sell at my take profit. However, if I'm selling the market, keyword, you see, even when we looked on the other chart, where we looked on our phone, it said sell, right? So technically, you are selling the market first, right? You are selling. And then when you take profit, you're buying. So you're actually doing both. So imagine you being at a counter. Imagine you being at a currency exchange booth. You have US dollar. They have JPY. You want to sell them your US dollar. They're going to buy the JP. You're going to sell US dollar and buy JPY, and vice versa. They're going to buy US dollar and sell JPY. So that's how those transactions work. So US dollar, I would have sold first. JPY, I would have bought if I was in that exchange booth. So you have to understand that what's happening is you're buying and selling in a transaction at the same time. There's somebody on the other end actually doing the same thing. So that's what's happening. But all you need to be concerned with is applying the strategy, looking at, do I buy or do I sell? If I'm selling the market, so if JPY is stronger, I'm selling the market. And at that point, I sell the market, then I sell the market first, then I buy at the end. So before we transition this call, you now know how to enter the trade. You now know how to enter the trade. You now know the type of trade you're taking. You now know how to set up your demo account, your live account, and now you understand if you're gonna buy or sell the market. So before we transition this call, do I have any questions? Oh, you're so welcome, and yes, it will be. It will be on YouTube. You're so welcome. Do we have any questions? Awesome, awesome, awesome. So I'm so glad that you all are receiving valuable information. But right now, since we do not have any questions, we do have time for maybe 1 or 2 more questions. 1 or 2 more questions before we transition this call. So next week, what I wanted to get into tonight always, oh, thank you, Ali. What I wanted to get into tonight was also, now all the information that we just learned and actually applying that to the BYOB cash out. So we definitely want to apply it to the BYOB cash out. And applying it to the cash out, now, because you are a master trader, you are the signal. You are actually the one that is ready to take it to the next level. You have embarked upon a newfound freedom. You've embarked upon something that is so significant. But you always want to understand the why behind the what. But what do 2 apps at the bottom? What 2 apps? What 2 apps are you referring to?
They talking about the heat wave and that other one, I think currency something.
So the heat wave. Now, okay, so let me address that. When we get to Easy Currency and Currency Heat Wave, when we get to those now, the Currency Heat Wave and Easy Currency, what those are how the market fees. So you want to know what is the strength of the market. They actually help you understand which currency is stronger. So the Currency Heat Wave, Easy Currency, they help you understand what currency is actually stronger. So if you're looking to see what the trend in the market is, what's actually happening in the market, you can actually use those strengths. What I do, I'm going to show you what I look at, because I look at the Currency Heat Wave and the Currency Heat Wave and the Easy Currency. I look at those to understand the strength of the market when it's helping me identify what I want to trade and how I want to trade that. But once I know, like for example, today, GBP was strong, right? It was strong. Actually, last week it was at its strongest because of the Brexit, right? Because of the potential, right? It actually rose 300. It rose 300 pips. What was it? Friday, I believe. So you actually had an opportunity to ride that wave. So riding that wave, understanding what was happening, you could actually look at the currency strength before you start trading and you say, okay, you know what? GBP is strong. GBP is strong right now. So that would tell me, you know what? Go start looking for potential buys on GBP pairs. So that's how that works. But the market, remember, the market feeds that. So what's happening in the market actually feeds the Currency Heat Wave. It actually feeds Easy Currency. So that's what you just want to make sure that when you're using that to understand the strength of the market, because that's what it's for, and that's what that meant. You're welcome. You're welcome. So ladies and gentlemen, I'm excited. I'm excited because I get to introduce to you all someone that is going to give you your RX for Forex. I want to introduce to you all someone